Tesla's fourth quarter earnings are finally out. Now, I've gone through these numbers and there was a few surprises in here and there was few that didn't surprise me. There's some good news in here for Tesla stock investors and some bad news, unfortunately, for Tesla stock investors. There is one thing that Tesla finally updated that I predicted it would update in 2023. It probably should have updated it in 2023, but they resisted and only updated it in this earnings release. So I'll share that with you as well. Overall, there's a lot to digest here. So let's jump in. Let's dig through the details of Tesla's fourth quarter and 2023 earnings results.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
Right. So one of the big highlights for Tesla throughout 2023 was that the cost of goods sold per vehicle declined again in the fourth quarter. Their team remains focused on growing their output, investing in our future growth, and finding additional cost efficiencies in 2024. So for Tesla stock investors, what this message is saying is we're, as a company, going to focus on decreasing our cost of goods sold by increasing quantity. In other words, that's trying to achieve increasing profit margin through economies in scale. So they're going to try to grow, and with growth to achieve these economies in scale. Because if you produce 5 million units instead of 2 million units, you can negotiate better prices on your raw materials. You can also learn things about your operations that could improve your cost per vehicle as you produce more. Also, when you're growing that much and this quickly, it could be difficult. You could possibly go in the other direction where you start to see diseconomies in scale because you're managing this growth. You become overwhelmed with the speed at growth and you become a little bit sloppy in your performance because you're growing so quickly. So those are two factors to consider here with this strategy where Tesla is saying, you know what? We're going to grow our way into better profitability, into lowering our cost of goods sold, which we already have best in class in terms of cost per vehicle, and we want to improve on that advantage. The problem is that's going to hurt profit margins in the near term. As you've already seen in 2023, Tesla keeps cutting prices on the vehicles so that it can sell more vehicles because it's producing so much that if it doesn't sell those vehicles, it's going to have an inventory problem. So that's something to keep an eye out for. Tesla, again, reminding investors it's focused on this strategy. We're going to try and grow our output. We're okay with cutting prices, but we're going to try to grow that output. We're not trying to achieve profit margins here at Tesla. We're trying to grow. We're trying to be one of the largest car companies in the world and transition into a tech company. So these near-term profit margins, we're going to sacrifice. We're okay with sacrificing. And sacrifice profit margins they did. We're going to talk about that here. But first, look at total automotive revenues only increased by 1% to 21.5 billion compared to 21.3 billion in the fourth quarter of 2022. And to make this even worse is they sold the relatively same amount of revenue in the fourth quarter of this year compared to fourth quarter of last year, despite the fact that they were cutting prices all year. So all of those price cuts did not lead to an increase in revenue. In fact, it only kept revenue like flat. If they didn't cut prices, imagine how much sales would have decreased for Tesla's automotive segment. The good news is the rest of the business grew nicely. Energy generation and services and other revenue grew 10% and 27% respectively. These segments are growing to become a relatively meaningful part of its business. Hopefully for Tesla stock investors, it will continue to grow. But these parts of the business are primarily dependent on its auto sales. So it really needs to boost auto sales so that services and energy generation can increase as well. I mentioned profitability took a hit. Gross profit, 4.4 billion. It decreased 24% from the 5.77 billion in the fourth quarter last year. So even though revenues were flat, gross profits crashed by 23% because of all those price cuts. Gross profit margin at 17.6% continues its decline. 1, 2, 3, 4 consecutive quarters of decreasing total gross profit margin. Income from operations fell by 47% to $2 billion, down from $3.9 billion in the same quarter last year. Although after 1, 2, 3 quarters of falling operating profit margin, the good news is that the operating profit margin increased from 7.6% in Q3 to 8.2% in Q4. Even though that was nearly half of the fourth quarter last year of 16%, that significant decline looks like it might have stabilized. Hopefully in the next quarter, if the operating profit margin is 8.2% or higher, that would be great news for Tesla stock investors. That remains to be seen. Still, the operating profit margin is half of where it was in the fourth quarter last year. That's a huge downgrade. One of the reasons why Tesla's stock trades at such a premium valuation compared to legacy automakers like Ford and GM and Stellantis was because its operating profit margin was well ahead of those. At 8%, it's not that much far ahead of Ford and GM and Stellantis. It's right about the same level. So I'm not sure how much longer Tesla could trade at a premium valuation to these other car companies if its operating profitability remains in this range. Although Tesla is an interesting company because it doesn't really trade on its current prospects or even its prospects over the next year or two. Investors in Tesla stock are sold on its achievements 5, 10, 15 years from now. They're convinced that Tesla is going to be this automotive taxi company with self-driving and AI and all of these services that will boost the company's profitability. The stock trades as if that's a foregone conclusion. I'm not yet convinced of that fact. That's why I don't know if I've mentioned it already in this video, but coming into this quarterly report and coming into 2024, I did not have Tesla stock rated as a buy. I told investors that for 2024, Tesla stock was not a buy. So more good news here to finish up this page. Tesla's net cash from operations increased by 33% to $4.37 billion. This was up from $3.3 billion in the same quarter last year. This is great news for its cash flow from operations to be jumping by this much. I'd argue that its cash flow from operations is a more important metric to look at over its income from operations because cash flow is more important than operating profitability. This is cash that's coming into the business. And all of this solid cash flow growth for Tesla has led to a solid balance sheet. The company has $29 billion of cash on hand. Remember a few years ago when Tesla was at risk of running out of money? Boy, those times are long, long gone. Tesla with close to $30 billion in cash has a strong balance sheet. It could fund its growth. It could fund its operations. It could even, if it wanted to, use some of this cash to buy back its stock if it feels its stock is undervalued, which I'm not sure Tesla is convinced that its stock is undervalued. But if it did feel that way, it could go out and buy its stock. For the full year in 2023, you can see just how difficult and challenging of a year it was. Total automotive revenue grew by 15%. Its energy generation and services business now are $14.3 billion, a fraction of the $82 billion in automotive revenue, but they're growing much quicker, 54 and 37%, and they're now a meaningful part of the business. Total gross profit margin fell to 18.2% in 2023. That was lower than all the way back in 2020. You have to go all the way back to 2019 for Tesla, where its gross profit margin was lower than 18%. And it took away a lot of the gains the company achieved in the last 4 years. I had been commending Tesla for its excellent increase in profit margins from 16.6 to 21 to 25 to 25.6. But at 18.2, it's reverting all the way back. It's reversing these 3 years of improvement in its gross profit margin, going all the way back to 2019 levels at 18.2%. Its operating profit margin at 9.2% for the year was down from last year at 16.8% and below the 12.1% in 2021. It's going all the way back to 2020, between 2020 and 2021 levels. And the actual number, 8.9 billion, was down 35% from the previous year. For the year, cash flow from operations was down 10%. Remember how I mentioned that cash flow from operations more important than operating income? Well, this figure was down for the year, 13.2 billion, down from 14.7 billion in the prior year. And then free cash flow down 42% on the year from 7.566 billion. So all of these figures going in the wrong direction for Tesla in 2023. And this would be understandable if you were looking at a stock that wasn't already trading at an expensive valuation. But Tesla's stock price was already 5, 6, 7 times the valuation of legacy automakers. And you're paying that price because Tesla was delivering the performance. Look at 2020, 21, 22. The performance was phenomenal. The profit margin going from 16.6 to 25.6, operating margin from negative 0.3 to 16.8, free cash flow from 1 billion to 7.5 billion, cash flow from operations 2.4 to 14.7. So you had all these metrics moving in the right direction and getting faster, getting better. And so it's understandable that you would be willing to pay a premium valuation for Tesla stock. But when 2023, all of those things reversing, going in the wrong direction, do you still want to pay a premium valuation for Tesla stock? So global production reached a record annualized run rate of nearly 2 million units in the fourth quarter. My estimate is that Tesla will produce something around 2.3 million units in 2024. I think they will continue to focus on unit output in favor of profitability. And so they'll increase the number of units sold. The Cybertruck, remember, this is not going to be a big contributor. Their capacity is just above 125,000 units for 2024. So you think about the over 2 million that they're going to produce, the Cybertruck's going to be less than 5% of total output in 2024. Still, it's a big part of the business going forward. You want to see them make progress on this new model. You want to see them hit their milestones for 2024, and then for 2025, you want to see that increase. Elon Musk has said the output, he expects it to go up to 250,000 by 2025. So you want to see this make the progress and hit that next level scale for 2025. And then finally, the big news, the item that's gone from the outlook. So Tesla saying that in 2024, their vehicle volume growth may be notably lower than the growth rate achieved in 2023, which was lower than in 2022, as the teams work to launch the next-gen vehicle at Gigafactory Texas. In 2024, the rest of the business will outpace the automotive business. Now, what's missing here is something that I had been asking or suggesting, predicting Tesla should have removed last year, because their growth rate hasn't been 50% for a while. So this was in just their previous quarter. The third quarter statement had this in there, where it said, we plan to grow production as quickly as possible with a 50% compound annual growth rate target. So for 2023, we expect to remain ahead of the 50% compound annual growth rate target with around 1.8 million vehicles for the year. So this target of 50% compound annual growth gone from the volume outlook in Tesla's shareholder letter. Now, I thought they would have removed that in 2023. I thought they should have removed that in 2023 because they were not growing anywhere near 50% in the last couple of quarters. But here you have it, the outlook removed. And I thought that when they removed this, it would cause Tesla's stock price to fall by more than 10%, maybe 20%. But as of this recording, in the after hours after this is out, Tesla's stock price is only down by about 3.5%. So If Elon Musk confirms this in the conference call, which is going on right now as I'm recording, you may see a bigger decline in the stock price, or investors might overlook this fact. They might overlook that Tesla quietly removed that 50% compound annual growth rate estimate in their volume growth. So, finally, to update my recommendation of Tesla stock, I'm keeping it where it was. I'm not downgrading Tesla stock because much of what came out in this quarterly update I was already expecting. I had already been expecting profit margins to decline. I was already expecting this to be removed from their statement because they hadn't been growing at 50%. And their valuation has already come down so much in 2024 and in late 2023. So for all those reasons, I'm just keeping Tesla stock rated as a hold. And in fact, if the price was to decline significantly following this earnings release, I may start to consider upgrading Tesla stock, depending on how much this stock price falls following this earnings release. If you liked the video you just saw and you want to see more just like it, please subscribe to the channel. I can't keep this channel free without the support of viewers like you. And if you're already subscribed, thank you, and I appreciate your support.